Hey traders, this is Blake Morrow with Traders Summit, and today I've got Jim Welsh with me once again. And Jim from Macro Tides, how are you?
I'm doing great, Blake. How are you doing?
I'm doing great. And it's always nice to talk to you on a Friday. It's a great way to wrap up my week. And I know for a lot of traders, just kind of hearing your input at the end of the week is great to hear as well. And so what I wanted to turn our focus, our attention to, and I know we've got Jackson Hole coming up, and you're going to have some words about that probably next week. But this week, we've seen an increased volatility in the currency market. We've seen the dollar rally to new 2021 highs. Now, previously, a few weeks back when we talked, you thought the dollar might make one more brief dip towards 91.50. We didn't. So why didn't it? And where do you see it going from here?
All right. Well, let me just really quickly, in late May, early June, I was looking for an important low in the dollar that would complete the correction that began in January of 2017 when the dollar got to 103.80. In February of 18, it dropped to 88 and a quarter. It rallied last year to 102. And so this is a big ABC to that low in May, June. That implies that we're going back up towards 100. So, my bias longer term has been very constructive since that low was hit. I was just trying to do short-term squiggles. From that low in late May, early June, I think we're now completing wave 5 of what could be wave 1, likely wave 1. And partly why, technically, if you look at it, we're making higher closing levels on the dollar index, but the RSI is more like 67 versus 74. So that's commensurate with the idea that this is a wave 5. That would imply a pullback 92.50, 9200. And then I think we're going to see another move up. And all this was predicated on that people are going to start to realize that the Fed, whether it likes it or not, will gradually move away from extreme accommodation toward first announcing a tapering and then next year addressing rate hikes.
So let me ask you then, Jim, if the catalyst for a weaker dollar, it might come as early as next week then when you're talking about the Jackson Hole Symposium. Maybe dollar bulls are just kind of let down.
Yeah, I know that's a good point. I don't believe Powell will say anything regarding tapering at Jackson Hole. Zero. And for good reason. The Delta variant is a problem. They want to see how job growth, if it continues to be strong. And we really won't get those answers until data comes out in September. And I think we will see some of the data points be weaker because like the employment report is done on the 12th of each month. Well, July 12th, the economy was in decent shape. Since then, we've seen softening in restaurant activity, air travel, hotels. And so I think the August employment report will tell us a lot in terms of how much Delta is impacting growth. The Fed wants to see those numbers. And I think the Delta is likely peaking within the next week. So by the time they meet on the 22nd of September, if they see that Delta is in the rearview mirror, job growth is still solid, that gives the hawks a little bit more leverage. But the guys who have been talking out most aggressively are all non-voting people. Bullard, Rosengren, Kaplan, they don't get to vote this year. Next year, it's a different story. So the Doves still have a plurality in terms of the voting within the FOMC.
All right. Well, that's good to think about because, a lot of times you as traders, especially as traders, we forget who the voting members are, who they aren't. And it's important to factor that in. Even though it ends up being a consensus vote, the bottom line is Fed Chairman Powell, he drops the hammer, right?
Yeah, absolutely. And again, within the Fed, some are talking about scaling 10 billion, which is the expectation. Kaplan's at 15 billion. I think Rosengren would agree. Bullard would agree with that. In other words, end tapering in 8 months so that by the middle of next year, you're done tapering. They're not going to discuss, they're not even thinking about rates until they're done with tapering. So that's why some of these guys think, hey, we have an upside risk to inflation at this point in time. Let's get done tapering behind us so that then we have an even playing field when we start talking about rates. So instead of 15, maybe it is 10 billion. So in other words, that'll be the push-pull within the FOMC. I still think it's more likely that they'll do it at the November 3rd meeting. But, it's up in the air. It's possible.
Yeah. All right, Jim. Well, hey, I want to say I always appreciate your thoughts. And, if people want to get information from you and learn more about what you do, because I love the fact that you marry your technicals with the macro backdrop, how do they find more about you?
Well, they can go to macrotides.com. And if they want to email me, Blake, Jim Welsh macro @gmail. And if they send me an email, I'll send them a schism of the layout of the FOMC. Who's the most dovish? Who's the most hawkish? Because to me, you can't tell the players on a scorecard. And that's the scorecard on the FOMC.
It sounds like I'm playing baseball right now.
Hey, it's August, man.
All right. Well, hey, Jim, thank you so much. And remember, guys, Jim, he posts here quite a bit on Traders Summit. So make sure you click his link down below to get to him. Also, if you're not subscribed to our YouTube channel, make sure you do so you don't miss any great content like this. Jim, thank you so much for joining us and have a great week ahead.
You too, Blake. Always enjoy having our conversation.
Same here. Bye-bye.